Supercharge. Everyone ready to get supercharged? Does it sound like Superfly? Good morning. How's everyone doing? Alexander and Sinatra and Richard. Hope you're feeling a little better. And the team. So.
Morning, Dale.
Hey,
Stel.
good morning, Coach.
Hey, everybody.
Okay. Hey, you guys. So Blake yesterday talked about this retracement area. You could see he's got the lines here. Then we noticed it was also at the 50-day. So warned about being short the dollar, felt the dollar could rally, put in a nice reversal day. And then one of the questions that Blake put to Stel was, would you buy bonds here? And he said, and they were, the 10-year was here. And he said, not till 10-year rallies at least up to 275. So, you know, for free. Actionable things you could have done. Nice call, guys.
Yeah, that was a great call on Stelios, and I have to say, Stelios, I did not. We were talking about this in our chat room yesterday. I did not expect that move to happen so quick.
Hell no,
that was wild. Yeah. That was wild yesterday.
Yeah.
So maybe what we get here now, and this is one of the props of the equity rally, right? But anyway. This was 100 bips, right? So I don't know, why can't we rally to where the 50-day average is here, up here around near 3%? It's pretty, well, I mean, the dollar.
If that happens, then this would have been a really, really big false breakdown. And I think it's going to squeeze, the yields are going to squeeze higher beyond there.
Well, you know, so just to mention, that was my chart of the day yesterday, and I think that's the risk, Stelios, and I hope that doesn't happen. I hope yields continue to come down, but I don't know.
Hey guys, hey
everybody. They have, it looks like bonds have more downside to correct here. Is my intuition correct, Relja?
Well, I think that you are most often than not, you're right. So.
Oh, well, I mean, what's your view on the bonds? They've had a nice run here. You know, a lot of guys, you were calling this a 4 and then this was a 5. So is this the beginning of something and we should be looking to buy breaks in treasuries?
Well, we definitely have seen an intraday impulsive reaction yesterday. So I think that dollar yen also has a chance to run much higher. I'm looking at the dollar yen resistance around 135, 134.50. So yeah, I think that there is, at least in the short term, there is more dollar strength, I think.
So here's Greg's. So this is what I call real interesting confluence, right? Greg has a count, and then you just go to a simple, 250 and look at how they're intersecting right there at Greg's number. So we didn't rehearse this, okay? It's just a coincidence, of course, right? All these things that, point towards certain areas are just coincidences, right, Blake?
Always. It's like
Stel. It's I mean, it's witchcraft, man.
It's witchcraft. It's trickery.
Skullduggery.
Has to do probably with a lot of luck.
You know what they say, the more experience you get, the luckier you get.
Yeah.
Right?
The harder you work.
The harder you work, the luckier.
The luckier you get, yeah. I got that one wrong.
So Greg is here with us too, and we had a pretty good down day in the metals yesterday, and we're recovering. What are you thinking in precious, Greg?
I think it's a pullback. We talked about this pullback yesterday. I think the Stel also mentioned
silver.
Yeah. So I think that there is still, we cannot fight this recovery that is in place since mid of July. So I think that there can be some price stabilization on silver around 19.60. I'm looking this to be just another fourth wave, minor correction on the way up. And I think that we could rally back towards 21 in the near future.
Okay.
Yeah.
Okay. And gold. I mean, the gold, the XAU. I mean, gold silver ratio. This was a pretty impulsive, right? So this should just be corrections, any bounces we're getting here. Doesn't this look like, was this what you would call an ending diagonal?
Not really that clear. I think it
Count.
was kind of fourth wave, and then you had this fifth wave high, and now it's impulsive to the downside. It looks like it's like that you're looking actually at the recent drop, like you've been looking on dollar yen. It's a very similar price action.
Yeah, so it's got more left after any bounces. So just to let our community know, that favors the long side of silver over the long side of gold. So
as long as we are on this ratio, as long as we are below 94, I think that that metals are actually can find an interesting support.
Okay, all right, and so let's see. I don't know what they're. Did the BOE, was it today? Did they
tomorrow?
Do anything?
Tomorrow. No, we had two events. You know, one being obviously Nancy Pelosi. She landed in Taiwan, had a couple of speeches. The Chinese responded by planning their most aggressive. How do you say it?
Show of force.
Yeah, when they do
military
these
exercises.
Military exercises, exactly, around Taiwan. And, you know, it's all heating up a little bit. But the markets don't care at the moment. What they do care about was Mester and who was the other one? The two women.
They pushed back on.
They said basically that don't read that. Don't the markets expecting a pivot are getting ahead of themselves. You know, they're going to keep fighting inflation, and they're going to be basically talking the hawkish talk, and that's the main reason why we got yields spiking.
Right.
And but having said all that, equity still, we talked about this on the flow show this morning. Equity still trading pretty well, given the general environment. Yes, yields had been dropping, but we're still with tightening central banks. The Fed still has to now tell us what they're going to be doing. It's not like forward guidance. They kind of taking that away. So we're going on a meeting by meeting basis based on data. But still, they have a hawkish slant. They're going to be hiking. So this is, rising yields is not good for stocks. Geopolitical potential problems is definitely not good for stocks. But, stocks are relatively resilient. So,
maybe it's a little flag off a straight line flagpole. And, you're talking about Fed officials. Even Kashkari is talking like a hawk, and he's the ultra dove.
He was the ultra dove, right? Always.
Yeah.
I don't know what to say, but
walk it back.
Obviously when Jerome Powell toes the line, everybody kind of follows, so you can't have huge dissenters, but yeah, you're right, he has changed this tune. But bottom line is the Fed is still not as hawkish as it used to be, but they're still relatively hawkish. They're still hiking. And we wait for payrolls on Friday. And talking about the Bank of England tomorrow, I'm going to reiterate, I think there's a bigger chance than people think or people expect for a 50. Same as it was with the ECB. The Bank of England is way behind in terms of rates. Inflation at 9.5% or whatever it was, and rates at as close to zero as makes no difference. So
I hear people are actually thinking that the inflation rate's going to get into the teens in the UK. It's a shame that we're missing Ryan and also K-Man today from that actually live in the UK. But that's what I've been hearing, and but also. The fear is that the Bank of England is not going to be able to keep up with the pace of inflation. So, or Andrew Bailey doesn't have the balls to do it. So
yeah, and yes, the BOE is hiking into a recession, which is coming, same as the Fed. So, Mike, you're right, but they have to. right? They have to
Everybody
address
is.
inflation. Everybody is. And you still have the lagging indicators, which are relatively okay. Employment is still relatively okay, but this is lagging. You know, we're going to see this effect in 2 or 3 months. You have such spiking energy costs. Producers, you know, manufacturers, they you know, their bottom line is severely affected. They're having to lay off people. This is going to come through the economy in the next few months, I think. So, you know, employment, I think, is going to turn as well. And then you have everything turning. So what do you do?
The fall. Yeah. The fall looks like that's when people are expecting earnings to compress as well. You know, earnings haven't been that bad this quarter, but they're talking about the bears are cases, big earning down revisions in the third quarter. And you know, and plus the consumer. I mean, we all knew after being in prison for 2 years, people were going to spend whatever they had, coins, cash, credit, to go out and participate in life again after.
Is that what you did when you got out of prison? I'm just asking.
Well,
I'm asking for a friend. Actually,
I got my Series 3 license right away because I knew I was suited for the business.
Hey, that's funny. Hey, Dale, you know, I was going to take over and I was going to go through like the indices really quick and kind of share with everybody, like kind of, and get everybody's thoughts on where the markets stand right now. But you were talking about gold a little earlier. I'm gonna bring up this you know, this level that I think is really important. And can you guys see my chart?
Prior low.
Yeah. So prior lows, you know, this whenever you see like a bunch of spike lows right around those areas, I think you need to pay attention to them. But the most recent spike lows you can see right here, and actually I could probably duplicate that arrow.
That's when I thought gold had bottomed back there.
What's that?
What, that prior low?
Oh, this one right here?
Yeah, so I got all bulled up. It worked for a while, and then here we are.
Yeah, you know, and the thing is, and I think that's what we really have to identify is these are really the key levels here. It was the 1680, 1675. I've actually talked to a couple people that think that gold is going to all-time highs from here. So, you know, I'm not in that camp. I actually think that gold's more of a range in more of a range right now.
I think Goldman said 2,500 by year end.
You know, well,
I think I saw that.
That's probably true. You know, with Goldman, who knows? But what I will say is that I think that gold does have some upside. But one of the reasons why I'm not convinced that gold is going to new highs is because I'm not convinced that the dollar has made a significant high.
Okay.
I mean,
well, that changes everything if that's the case.
It does. And the one thing that I have to point out regarding the dollar is just kind of what we were talking about. Well, first of all, the dollar technically is holding on to you know, this bullish channel. But the more important thing about the dollar is really you're dealing with the ECB and you're dealing with Europe. And I mean, what do you guys think? I mean, we're heading into the winter. I mean, I know it's hard to think about right now that it's August and everybody's on holiday. Most Europeans are out and about, but really, you know, in the next 2 months, it's going to start getting cold. And, you know, we've got this Nord Stream issue still, and Gazprom and, you know, then you've got inflationary pressures. I mean, what's the bank, what's the European Central Bank going to do? I mean, can they even raise rates? Stelios, I know you've been really adamant about the ECB raising rates, but are they going to be able to? I mean, that's the question, right?
Yes. Well, it's not really what's the ECB going to do. It's what the governments are going to do. What's the German government going to do, apart from asking people to, you know, ration and not turn on the heating that much. So it's a very difficult decision. But the ECB has one mandate, and they have to fulfill it. You know, that's how it is. So.
Is it what Trichet used to say? Is it price
stability? Yeah, I know it.
Stability.
I know it sounds stupid when I say it, but that's their mandate. They have to fulfill it, and they have been postponing it, as long as they can. But it's something they have to do. That's why I think they have to keep going until economic data tell them that okay, we have turned, and that's it. That's when they're going to stop. Same with the Fed. Same with the Bank of England, I think.
Mandates and words, are for lawyers. Practice actually shows that the only mandate that central banks are not willing to break and violate is the one that they have not published, which is supporting bankrupt governments, right? The ECB is trying to support the Eurozone from imploding, because if spreads of weaker countries, exploded higher, then the market would start doubting the stability of the Eurozone itself. The Fed, on the other hand, has to monetize the incredible amounts of deficits produced by the US, and there's no willingness to put an end to them, as it seems. So that's the actual number one mandate that nobody admits to, and the rest goes afterwards.
Steve, and good morning, Steve.
Good morning.
When you talk about the unspoken mandates, I mean, you've got the Fed, where even though they don't talk about supporting the stock market, they really tend to be more slaves to what's happening in the stock market as well. In all actuality, if you think about central banks, they are really just passing on one problem to the next board of governors, the next
exactly
next central head, and hoping that that the market doesn't implode
exactly
on their watch.
On their watch.
Yeah, they don't want it to happen on their watch, and the unfortunate few. Whether it's the Bernankes of the world, or the .com bubble was Greenspan. Whether you get plagued with that.
Greenspan wrote the playbook, in essence, of what has been happening during the past couple of decades, right?
Yeah, and he has. But the fact of the matter is that we will, the financial markets will feel the reckoning of what central banks have done, in some time. But is today now, or is it now? And is it the ECB now? And going back to what the ECB, their playbook. Are they going to be able to raise rates? I mean, what do you think? Are they going to be able to raise rates? That's the question.
That's the problem they're trying to solve, right? They want to raise rates, but at the same time create a new mechanism so that raising rates is not going at the same time to cause rates to raise with divergences, right? So they want to find a way to raise rates uniformly, right? So it's again one problem they've created, and instead of solving the problem and letting the market be the market and each country solving their problems, so if your finances are good, then your bond yields should be comparatively good, etc. So they're trying to solve one problem they've created by creating some kind of a new mechanism, which of course is going to be another mechanism that distorts markets, and that's going to have another negative effect we're going to find out in the future.
Let me ask you guys, as Greeks and Europeans, do you think the Eurozone was a good idea? Do you think you'd be better off with the drachma and Greece running as an independent country?
No, we wouldn't. But if you asked me and I was a German, I would say we would.
So if you were Germany, you're like, screw this noise. I don't want to be any part. I don't want any part of.
To be honest, Germany has benefited indirectly in some ways, right? But in my opinion, the Eurozone, especially the way it was created, was more for the benefit of all the people that are in charge of all this and have created nice jobs for themselves. And, it was a half-assed, if I may use the word, it was a half-assed effort. that couldn't go all the way because nobody wants to cede their power completely to some kind of a new structure, right? So it would either go all the way, or it will either go all the way at some point if it wants to be, saved, or I think it's doomed to fail sooner rather than later. Right.
All right. Well, it's an interesting topic that won't make us any money in the near term, but
yeah, that's true.
But it's interesting to hear you guys' perspective. All right, let's talk a little bit about the euro, and I'm just going to talk technicals here. Euro, tried to break above the 102.80 level. This is a big resistance. If you guys don't know why it was a big resistance, if you just look right here as a 50% retracement of this is the last big move lower. You can see it up from June all the way to the lows. That was a 50% retracement. We probed it above those highs around 103, failed, and obviously the euro came back down. I have a really hard time technically getting long the euro, or let me rephrase that, getting bearish the dollar while the euro trades below the 103.50 level, which is the 2016 spike lows right here. While we're trading below that and below this trend line, which comes in roughly around the same price, maybe around 103.80, maybe 104, depending on how long it takes us to get there. Anyway, while we're trading below that level, I do have a very difficult time being bullish the euro. Even though I played the euro on the long side, when it was below parity, as a counter trend bounce, I'm done with that trade, and now I'm more skeptical about where the euro's at. So, in other words, the euro is really going to have to do a lot of convincing technically for me to become bullish the euro. So with that being said, knowing that we have CPI data next week in the US, that's going to be the market mover. Obviously this week we have jobs report, we have NFP on Friday, we have ISM data today, which is going to be a market mover. People are going to be watching the employment component of that, and also the prices paid component in the ISM data. All of that is really going to matter today, but what's going to really matter next week is going to be that CPI data that comes out of the US, which will be next Wednesday. That's going to be the market mover, and that's going to be probably what shows to us whether we're going to be breaking 104 to the upside. That means more dollar weakness, or we're going to see a revisit of parity in the euro. Some of the guys that there's a gentleman, Benedict, in our chat room. He's been in our community, and even before I started ForexAnalytix, he was in my community, over at MB Trading. But he trades at a bank. I have a lot of respect for him. He's actually looking for a move down to 89 first, and I was like, wow, I'm not quite in that camp yet. But if you think about it, if we make it down towards 90 cents in the euro, and you can see this is a big, major multi-year breakdown. If we make it back down to 90 cents, I might actually have to come visit you guys in Greece. I mean,
you are coming to visit us next summer, like it or not.
I am.
Irrespective of the exchange rate.
Yeah, let's make sure that the euro gets down there then. As a result.
So start selling massively in the markets, guys.
So the euro, just keep in mind that was a major breakdown when it sliced through the 108 level, earlier this year, and we remain pretty bearish. I mean, as far as technicals go. Hey, I want to take also a really quick look around because we were talking about FX. We talked about gold and the key resistance that hit there. I do want to talk a little bit about the S&Ps before we have this data. The S&P is actually holding on to this 4080 level. If you're reading the analysis on ForexAnalytix, we've identified how important that level has been the last couple of days. 4080, 4081, big key levels that we've been talking about the last 24 hours, and it's held. It's hard for me to be bearish.
Looks like a little bull flag there, huh?
Yeah, it does look like a bull flag. These all look like continuation patterns. You can say this bull flag here, bull flag here. you know, and so on and so forth. So, you know, the markets still look, you know, bullish currently based on the structure that we see technically. And also remember that was the previous support, current resistance. It's all really key. You know, we still have, based on what you're seeing here, we still have the ability to actually make it to the 200-day moving average based on a bull flag pattern. Now, the question is, will we be able to break out or not? And I think that has more to do with on what happens on Friday. You know, jobs report, as long as the jobs report is weak, but not too weak, it's kind of like the three little bears. You know, you have porridge, as long as it's not too cold, but it might be just right, then we might get stocks moving higher. Remember, stocks move up on weaker data. So, you know, that's the market that we happen to have been in for the last few months. I think a lot of people have failed to identify that up until the recent week or two, but really it's bad data is good data is bad. So just, you know, and when you're talking about currencies, good data is good for the dollar, bad data is bad for the dollar, but in equities and risk appetite, it's actually opposite, and it has been for the last several weeks. The NASDAQ also, you know, you can see how the NASDAQ's above 161% extension. We're probing some pretty key horizontal resistance, and notice how we're trying to get above this channel resistance. So keep that in mind when you're thinking about what's happening with the S&Ps, that's happening as well. And if you take a look at the Dow, you know, the Dow is still making lower highs, but hell, if we can make it above 3350, you know, that's a bit of a game changer as far as the Dow goes, because that would be, you know, kind of bucking the trend and, you know, not seeing that, you know, the lower highs anymore. So that would be an important development when it comes to stocks. And so if you're trading the S&P, it's important to take a look at what's happening with, you know, what's happening with the Russell. You know, Russell completed an AB equals CD move. You got the Dow, you got the NASDAQ, you got the S&P. You got a lot of markets that are trying to build some momentum. And just to keep in mind with the S&P, we have not made a higher high, which we'd need to, you know, create above 4,200. Any other input that you guys have? We just have a few minutes before the a few more minutes before Dale has his interview, but do you guys have any other inputs as far as the markets go? Like, Greg, is there any counts that you see that are important that you're looking at as far as the equity markets go?
Actually, I think that this price action, since it's very slow for the last few days on the S&P here above 4,080, I think this is consolidation of a wave 4, and I'm afraid that we will see a push higher maybe on Friday before market may stabilize. So I think that we will see new highs this week, but I would not be too aggressive if we see a move towards 4,200, because I think that on the intraday basis, then this could be a fifth wave.
Yeah, you know, so this would be a fifth wave if we made it to the
minor one, yes. The minor one, yes.
Okay, and by the way, if you want to, you know, look at some of Greg's Elliott wave counts, you can find them here on ForexAnalytix. He provides the Elliott wave analysis in the platform. So if you guys want to see where all that is, you can read through it on the platform. So thanks, Greg. Stelio, Steve, do you guys have any?
Don't trade without it.
Don't trade without it. And Dale, I'm going to get to you, but
oh, sorry.
Steve and Stelios, do you have any inputs as far as equities go any levels that you're looking at?
I totally agree with Greg. I agree with the level 4,200, and we already said before, Blake, that this looks to me like a little bull flag. So yes, I also expect equities, at least in the short term, to push higher.
Okay. Thanks, Steve. And I'm not sure if Stelios is still here.
I'm here, but I've nothing more to add. They've said it all.
Man, you, I tell you, you know, Stelios, we're gonna reprogram you with some different answers. Dale, what do you think here?
After that push,
you bullish?
Well, I think that after this push, everyone's talking about the new highs. We pull back to 3,900 ish, and then make a run to 43, 44.
So you don't think there's going to be new lows for the year?
I don't think that we have a top until I'll see where things are at in September.
All right. Well, let's see how.
I was
think this
calling
week's
it a summer rally, so I want to give it the summer.
Yeah,
See what
well,
happens.
you know, one of the things that we haven't seen, and I'm saying this because we've been talking about, you know, the capitalizing on this move higher in equities the last few weeks. It feels squeezy, but it hasn't really felt like a squeeze, has it? That much, Dale? We've been through a lot of squeezes. I mean, come on, you know.
The last few days after the Fed certainly feels like people got squeezed pretty hard, and those were two pretty, you know, we've had a heck of a 5-day period here.
Yeah. All right. Well,
up 10% in 5 days.
You know, yeah, definitely. Well, hey guys, just I know there's a lot of people on holidays right now. It's interesting. I was telling every year we've been broadcasting here for how many years, Dale? 6 years now?
Yeah, I think 6.
It's 6 years, and prior to that, the Morning Edge had been broadcasting in one way, shape, or form since 2002. That I've done the Morning Edge show, and every time in August we dip probably about 20 or 30% of our viewership because everybody's, you know, on holidays or whatever. So the reason why I bring that up is because liquidity is going to be poor this time of year. If you guys are out there trading, you guys and gals are trading, make sure you're cognizant of that. You know, markets move sometimes because it's flow related. It moves erratically sometimes because, like I said, it's flow related, and there's not a lot of people on the other side of the offer or other side of the bid as the markets are moving. So please trade carefully. Try not to get in any trouble, because if you get into trouble, it's hard to dig yourself out of holes this time of the year. So that's why you trade smaller and be a little bit more nimble, and try not to let trades get away from you. It's always, you know, a good practice this time of the year. And then I also have to mention that if you really want to join, you know, one of the, you know, most active communities out there, come join ForexAnalytix. You can join it through ForexAnalytix just by taking a trial, or you can go to the Trader Funding Program and learn how to trade our money and not risk your own money and keep 75% of the profits. You just have to pass our assessment. If you want to know more about that, just scroll down to the bottom, see the account sizes you can access, and watch this little 2-minute video right at the bottom of that page. It'll tell you all about the program. But Dale, have a great interview. And
Thanks,
you know,
Mike.
I know a couple of our team members are on holiday right now, in the ones that are in the UK. So you guys all have a great one. Thanks for being here with us every day, and thanks for your support.
Okay, team. So Stray Dog, I'm the dog catcher. Welcome back to F.A.C.E. How are you?
Hi, Dale.
Hey,
do you hear
Relja,
me?
how are I hear you loud and clear. How are you?
Great. I'm fine. Let me just show myself a bit. Hi, everybody.
Oh, okay. Hi. How are you, buddy?
I will just now turn off the camera and let's talk. So in the
Yeah,
previous...
so you want to talk about the DAX? I saw your tweet. You had some...
Yeah, I want to talk about the DAX between other things. And
okay.
In the previous interview, which was my first with the F.A.C.E. back in April, I talked about my beginnings, and who is interested to hearing about that, he can find the link on the YouTube, and also I put that link on my own website in the About Me section. But long story short,
share your screen? You want to share your screen while we're talking?
Yeah. Okay.
Down at the bottom.
Yes, I can see that. Share.
Okay. Here it comes.
So this is one of my charts. It's a DAX monthly chart, one of the popular charts that I'm showing from April 2021, when DAX first came here, hitting this upper rail of a 15-year-old channel. And you asked me last time in April why I think that DAX is old school instrument. And I think I have thought about that question a lot, because I do think that DAX is an old school instrument, simply because it reacts very good on horizontal levels and on industry standard moving averages like daily 50 or daily 200. So long story short, about me, I'm a short-term trader. My focus is day trading. And my primary question each and every day is going to be, where is my day trade for today? Also, my trading system is location-based trading, which is like, let's say, like a adaptation of the Wyckoff method, using some of the James Dalton principles as well. And I mixed all of that together into something that is simplified enough for me. I'm in trading for 18 years now, and simplification, longevity, in trading, and repetition is very important for me. So that's
you could be simple yet powerful.
Yeah. That's just the case. I think people often forget somehow a simple horizontal line can be a very powerful one, and we can see something about that on this chart as well. For example, although I am day trader, I like to visit monthly chart, especially when month is over. Now we have step into the new month, and August is just this here, this one millimeter here.
Right.
And the big difference between DAX and the S&P is that this was in June for DAX. This is July. On S&P, we have like a railroad candles of approximately the same size, and the same is on other US indices. While DAX had this huge June, which actually was the worst June in the DAX history. There never was a bigger June than this. So that's the difference, and this, which I like to call the eye of the Sauron, is pointing at the previous highs. So this was highs here from November 2017, and this was January 2018. And you can see here how prior to Corona downside, the new high from February 2020 was just a poke above these highs. And we can see that pattern. On that pattern, I'm basing a lot of my trades on the false breaks.
Okay.
And we can see those false breaks, like I tweeted about that a few days ago.
We're approaching those levels again.
Yeah, we can see those false breaks on any given time frame, on monthly, on weekly, on daily, on 5-minute chart, and on smaller time frames. It is important for us for
maybe there's stop
day
hunts.
trading. What?
Maybe there's stop hunts.
Yes, most of those are, especially on smaller time frames. Now
you know my handle, right?
Yeah, I know, Forex Stop Hunter. And we can see those hunts all of the time. Let me go down. So this is a cash, also DAX cash index. This is daily chart, and now
nice.
Here there is for untrained eye, there is a lot of stuff going on here, because this is a chart where you can see daily 50, you can see some levels from before, you can see untested cash closes are these dotted lines, and those would this was potential targets if the market could break higher, and the one here, this was Monday, and you can see here this doji candle, how they literally tested almost to the point the April low. So when I say simple things, I mean about previous month's lows highs, previous week lows highs,
everything to the left.
Yeah, previous days lows highs, and so on. And here we can find some fantastic levels, but you can find it only if you have an eye for that, and if you let yourself trust those levels.
How about using your imagination when you're charting?
You can use, of course, your imagination. I will show you this. I will show you this chart much more simplified when none of this happened. So let's go in time. So this is also DAX, but I have moved the chart to the left just to observe this, which we had. This is the all-time high from November 2021. And then here we had the, let's say, double top. This one is actually lower for like 5 points. And this here, which you can see, this huge rally, that was the Santa Claus rally. It started at 20th of December, 2021. Yeah. And here we got like 11 months. DAX wasn't really doing anything here, nothing much. And it was stuck here. So all of this is monthly, and this is daily. And I remember that in that period, whenever DAX came down, down to the bottom of the range, so it was very similar to Russell 2000. Going down to the edge of the range, it was picked up. But then Russell had a so-called dead cross, daily 50 going down to daily 200. And DAX, which is not correlating with Russell, they started to mimic that pattern. And after
isn't gold Relja still operating under a death cross from several weeks ago? I know you don't.
To tell you the truth,
you don't know.
I don't know, to be honest.
Okay. All right. Then let me ask you this, because you know, that was a reporting. What do you think the probability of, you know, death crosses and golden crosses are for maybe being right for a little while, but then aborting?
It is a good possibility, you know.
So I mean, it's not a high probability.
No, I actually don't like those moving averages crosses. I am just talking about how the patterns were months apart.
Yeah.
But still, it happened pretty much the same on DAX. And the point of this chart is that when you see a level, it is important for you to mark that on the chart, because later, now we are coming to that later phase, it can serve. Now here, it is serving as a resistance. It was a poke, yes, it was an upthrust. It didn't test it to the point or anything like that. But after you see this daily candle and the price going down below that level, and the market showing inability of making a follow through above this, that it needs to be clear that it wants to go down. Now it is just a matter where it will go down. For example, this here, which was May low, DAX with these two candles, they were breaking the minus 20% from the all-time high. So at that period of time, only these two candles were like in those kind of technical bear market. How to say that, the one that media likes to call a bear market. But
20%.
Yeah, minus 20% from the all-time high was like here, somewhere here. So the only 2 days that actually closed below minus 20% were these two. But market showed much before that bear market behavior.
Oh, of course. Yeah.
For example, war started here. This is the candle, war between Russia and Ukraine. And you see what the first reaction was. They first went higher, and then we got this slam. Okay. And here, to be honest, I was wrong. I thought that this is a fishy bottom. It turned out to be a swing bottom. My idea was that market could go toward here, which was the October 2020 low, because here you can see that only a few candles were present, not much volume, not much time, and I was wrong there. But then when you have this kind of level, which is a very significant one, let's go now to future, and this is what happened in July. You see this trend down day piercing just a bit, and here we have a spring. So my trading on smaller time frames, I often say that in my videos and when I talk to other people, give me a false break and I'm going to exit it on it. I'm a great believer in those false breaks and those pokes above level or below the level and not being accepted there, because what is this? False breakdown, which becomes a buy setup, and this becomes here a sell setup. And also you can see here how DAX, for example, when they made April high, they tested it 2 times. At the end, they made a false break. And this is what not only DAX, but other indices are also prone to do. S&P is doing that also quite.
How about moving from a history lesson to current market conditions and what you're thinking here? You know, we had the Fed last week, market exploded, squeezed shorts enough.
Let me go to the S&P.
Okay.
So this is my chart. This is my chart of the S&P, and what I think here is also that if we are looking at charts and if we want to trade, chart based to have a chart based trading approach, then chart should go first, because here there was really big rips in this bear market. There was really big dips as well. And when people are stuck in some kind of fundamental thinking, they could, be in drawdown, in longs from bad positions, or now in shorts from bad position, because somebody could, like sell it here, where S&P was struggling around the minus 20% level, and also May low was important for the S&P. They were going up and down through it. They couldn't find acceptance there, and at the end they did. And now I think this 3-day range here. Now this is index, so obviously there is no candle for today's market is not open, but this 3-day range, which is just almost right at the resistance field, which I think is very important, because this here was a good amount of time and volume spent here. So from the supply and demand perspective, this is a good resistance, and no wonder that they are having trouble here to break. And so here I think it's going to be very important where the real break from this goes, because market tends to, at least if it's doing that on DAX, but I have observed the same behavior on the S&P as well. It tends to poke first, to test the both edges, to poke first, and then to make a break. For example, like it did here. So this is also a range. They poked higher, but then reversed hard to the downside, and you can say the same for this. So I think this is very important, and Nasdaq also is at the important level.
Yeah.
So I think these charts are pretty simple enough, and here just between these. So this is, for example, this is CFDs. I know that people are not really fond of CFDs in the US, but you can also put the where is my ES? Okay, ES chart there, and just Friday low, which is this, and Friday high, which is this, provided us with a very good trading opportunities, just fading those references like this.
Okay. Would you fade it again, or let me ask you this? So you have 3 touches on the top side. Do you notice that after 3, that if it keeps knocking on the door, the more it knocks on the door, the weaker the door?
Yes.
Okay.
My approach here is this is the anchor point. This is the anchor point. This is the first test. In this case, this was a false break, which I like more. I like more to see a false break, because false break by itself is more bearish than outright failure from a resistance, because this is a trap as well. And we can imagine they're poking here like 1 or 2
people are getting long,
and people are getting long. They're like, oh my God, it's a breakout.
Yeah.
But I'm saying that all the time.
You predator. You stray dog. You stray dog predator taking advantage of
the industry.
FOMO.
The industry is teaching us some things that are based for swing trading stocks. Because most of traders are trading stocks, and then they're going to say, wait for a breakout, and when you observe the breakout from the base, bang, you're long. But indices are baskets of stocks, and they are not that fast, they're not that volatile, beta is lower, and blah blah blah. And especially on daily basis, they're not making breakouts, that often. Most of the time, they're going to do this, and in the end, we are going to get a break. So, in my opinion, long here is not when they poke a bit. That cannot be long. Long can be like a push higher significantly above this, then making a pullback. And I'm going to long. I want to go long here, but here I'm waiting. And as soon as I see that they are dipping below this bang, I'm short, and my risk is here, a few points above this. And the same goes for longs. And what you ask me about tests, obviously, when you test and test and test some support or resistance, whatever it is, it's going to be weaker. It's not going to be stronger. Although I have on my Twitter feed some axis lines, for example, one on NASDAQ, it was tested 17 times. It was working for, it is a level around 11,700, and it was working for 17 times as a support or as a resistance. So just imagine that you are making your execution is at the zone. So if the zone is support, you're going long. If it is a resistance, you're going short. Inevitably, there's going to be a loser at one point. And yes, it was served like 17 times, but in between, it was some moves that were going through that zone, and you would on 17 occasions have a winner, but on 4 or 5 occasions you would have a loser. And I think that's okay. But you need to execute every single time without questioning, which is the thing that many people are doing. They're questioning, but is it going to work this time?
And what's your hit rate?
That's the wrong question.
What is my hit rate?
You think like win-loss ratio or something like that?
Yeah, that's a bad question.
No, it's a okay question. My personal win rate is for good time around 70 to 75%.
For good times?
No, for good times, but for
for
a long long time.
Okay, for a long time. That's excellent. Yeah.
But
and,
I am interested mostly in setups in day trading, which are fades and false breaks. Not so much about continuation type trades, because they are rare. For example, this is DAX. Oops.
Yeah, you're looking for kind of like inflection point trades.
Yes, exactly that. Location-based trades,
shorter
inflection points. Yes, and you're fading those inflection points. For example, this is what we got yesterday, and this is yesterday, these lows in DAX, and this is today. And in both cases, we got the open drive lower first. So this is the opening candle yesterday. And I told in the video yesterday, because I always advocate, for us to have a resting order, like have a limit order. If this is in this case, S1 zone, that means this is a main resistance zone. I'm sorry, main support. Oh my God. Main support, have a resting order there. What's the worst possible thing that can happen? Obviously to be stopped. And on that stopper, you're going to lose -1 R.
So you put both the resting order and the stop
I put resting order here, and that
stop.
resting order will, in my case, so I'm training like that. Every time I'm entering the market, I'm entering with a bracketed order. So that order already have the stop and already have the target.
Okay.
And those can be some generic values, but then you need to adjust those values to be, stop must be behind invalidation points. Stop cannot be too small, otherwise you're going to lose all the time. But you see this.
Do you find that you have the patience to teach?
I like.
That's why you do it via video.
Yes, I like to make those videos because I think they are not helpful only to the selected few people that are actually watching those videos, but to me as well. Because at the end of the day, when I make a video, I'm going through those repetitive concepts, setups,
NLP.
things that market are doing all the time. Like making marginal higher high, like you see this A marginal higher high going back into the range. What is this? Marginal lower low with bullish divergence going back into the range. And they are doing that all the time. And inevitably, you know,
I know it's good for you, but you know,
this
when
range
people,
is going to break.
I know it's good for you.
Yeah.
Okay. I know that's part of the reason you do it. And you also want to attract business. But let me tell you something. If you can't ask somebody a question when you're trying to learn something, that's an important element that's missing in the mentoring process.
Absolutely. So, for example, my email is always open, not only for people that are my subscribers, but for everybody. And,
okay, well, that's cool, man. All right. Because you know, a lot of people do, you know, they'll put out videos and then people can't even reach them and go, well, you say this and what do you mean by that? So you know,
of course, and you never know what kind of person is going to, you know, be a client. Is it going to be a person trading 20 years who just need another opinion, who just want to read morning notes, just want to take a look at charts? It doesn't, you know, for example, he doesn't care at all about videos. He doesn't need videos or anything else. Or is it going to be a beginner who doesn't know what daily 50 is, who doesn't know what the cash close is, and then you need to take some time and explain a few things.
I can't do that anymore. Anyway, thank you. Anyway, I used to be able to. Anyway, it was great having you. And sounds like you're in the zone because you're usually in the zone. So,
I am in the zone. I can finish this video like the last one with the anecdote if you want.
Yeah, I love anecdotes.
Anecdotes. So I think everybody that ever traded in the brokerages or prop firms can relate with that kind of anecdote. So traders received a plan. And it was a good plan. It was done by the analyst. The head broker was there also, and market cooperated, and everybody was profitable but one trader. And he lost. And he said, I lost. And head broker asked him, what did you trade? And he take a look at his plan. So it was a person who was commodity trader in the firm, and his job was to trade oil. And he looked at his plan and he said, okay. So levels were good. And why didn't you execute? What did you trade? And the trader replied, well, I trade some shit. Well, that's why you lost. And the anecdote is about the trading plan. If the plan is decent, if the plan is giving you decent zones in decent areas in decent scenarios, that plan you can throw into the garbage if you don't execute on it. If it is just staying like that, it's nothing. You need to execute. So that would be it.
So know why you're getting in, where you're wrong, and if you're right, what you're looking for. That's a plan.
That's a plan. Yeah.
Okay, buddy. Well, I plan to have you back someday.
I'm willing to do
Is that a plan?
That's a plan as well.
All right.
you know that I'm not shy. I literally have like 10 notes opened about possible topics that we can discuss. There is so much to discuss in the world of trading.
A million ways to skin a cat, and stray dog, you have no fleas. All right.
Yeah, I hope so.
And really appreciate you sharing, you know, the kind of stuff that you do, and have a great remainder of the summer trading season. And we'll get back together in the fall. We'll get back together in the fall, my trading warrior brother.
I appreciate it.
Okay, everyone. Relja, and you can find him on Twitter at Stray Dog Trading. Is that the best place to?
Yeah, this is my, let me, oops, I don't see, okay, like this. It's at Stray Dog Trading,
Okay, and you let people send you DMs or emails, and
email is
want to show
much,
your YouTube page?
Email is much better. Let me just
there's your website. Okay.
Yeah, this is my contact for people if they want to send me an email. Also, I have a
Your dog
YouTube.
looks like an NFT, man.
Yeah,
Your logo.
that's an idea. Logo is
I
actually
want
done.
20%.
Yeah. Logo is actually done by my wife.
Oh, wow. Talented. Okay. All right. Well, thank you, buddy. Relja, thank you very much for being with us. I guess he can't hear me. Or am I gone? Anyway, guys, thanks. You could join the team in 15 minutes. See you, Laura, Alexander. People enjoyed hearing you, Stray Dog. And I love dogs.
Me too.
I think, I think that God had his best day when he made dogs, because they give us a sense of how he loves us, and practice to let go because they have shorter lifespans. So anyway, that's the end of my homily. Everyone have a great day. Good luck in there. Remember, we have NFP on Friday, so don't load the boat in front of the number. And don't just count your pips, count your blessings. Appreciate your time, buddy. Thank you.
Thank you, Dale. Bye.